morning to all traders and welcome to another Markets on Waves. It's the 18th of August today, Wednesday midweek. We've had quite of a surprise yesterday with dollar's strength, shift in market dynamics once again. So we're going to have a quick look on the index, the Euro Dollar Kiwi, RBNZ overnight, gold, as well as LUFTHANSA. Starting off with the US index, guys, you remember that I was looking at this move until pretty much a couple of sessions ago, where we saw this move to the downside, quite impulsive looking structure, and changed my main to probably being down here and we'll start moving lower down. However, as you can now see, that I have brought back the previous scenario, despite the fact that I didn't like the fact that the correction over here, because it's a deep correction, usually we get something like that. Both the corrections are gonna sum up to 100 or something. As you can see here, I've got 95% correction and then another maybe 50 here. So it's a bit of unusual structure to see based on the guidelines, of course, not rules. With that said, now we're looking for more upside, okay? And since this is somewhat supported here, I mean, if we compare it to the previous low, it's definitely supported. There is a very, very obvious hidden bullish divergence over here on both MACD and RSI. And we are looking for prices to move higher. So we've got 1 and 2, yeah, and perhaps we're going to get 3, 4, and 5, because internally we've got another structure here. And that's going to be done perhaps at the either equal to wave 4, yeah, up to 93.80, or equal to wave 1, because wave 5 is different ways to measure wave 5, can be like around 93.50 or so. Or what we could do is just measure from bottom to the current top back to the wave 4 and look for the 61.8 at 93.40 or so. Okay, now that can lead to further price increases if, of course, we're going to see this developing as the first wave of the fifth, yeah, because it might be 1 and 2, 3, 4, and 5. If that's the case, most likely then the index is going to head towards the 94.72, which pretty much is the wave 1, because when 1 and 2, 3, we're going to get the 4 and 5. Okay, so this is where we are now over here. So it's possible, and that will be the level that is going to, give us further guidance should we get there, of course. But if we break above that level, then this is all done. This is a structure that, it's not going to be the main one. It means that we ended, and that's going to be a reversal signal. Now, on the euro dollar, you remember last time I was looking at this as an ending diagonal. I mean, we can still see this that way. Let me just remind you over here. We were looking at 1, 2, 3, 4, and 5, and we said we're reversed. Now one can say, well, what if, that's still 1, 2, that's still 3, that's my 4, and I'm going to get my 5. It's possible, okay? It's possible, but the thing is, we didn't move up to the 50, right? And we started moving lower back down. We did a double bottom here. So one might even say that, okay, that's it. I'm going to start reversing again. But because on the index, it looks like we expect more upside. I'm a little bit biased, I would say. Not something that we usually have to use when we do Elliott waves. But the truth is that if, structurally speaking, there is two scenarios that have equal probabilities, then it is fine to use some other measures in order to, to have a more clear path, if that makes sense. Although it's still very mixed because the two probabilities have high, they're pretty much equal. With that said, though, what is more important that we most likely expect another leg down. Okay, so my main thesis is that we remain bearish in the short term. This is what is more important. If we break the 117 though, okay, breaking 117 means we can head down to 116. The question is this 1, 2, 3, 4, and 5, and we ended, or is this 1, 2, could be 1, 2, 3, 4, and we're gonna get 5, or you know, is this the beginning of, like, this is 1, we're gonna get 2, then 3, 4, and 5? Because if that happens, the end, we're looking for a low much lower than 116. In the case though, we still remain okay for our flat pattern, guys, because flat patterns can have an extended wave C. Okay, so we don't necessarily need to finish by the previous wave A, but usually is what happens. Now Kiwi, if you remember, we are looking for wave 2, well, 2 or B. W, X, and Y, double zigzag here. We've got this move done, this one here done, yeah. Flat, sorry, yeah, well, flat for wave A looks like B, C, D, E, with the truncation in E. Don't forget for triangles, guys, as long as we're done, because truncations, you know, they have their own level. As long as we do 70% of the previous high is okay. That's the same case for a final wave 5, yeah. 70% can be considered truncation. Now over here we've got 1, 2, and there's 2 scenarios here, 1, 2, 3, 4, 5. That means this is 3, we're gonna get the 4 and then 5, yeah. Or this is like 1, 2, 3, 4, and 5, and it finished, and we're gonna keep moving higher up. Although some would assume that, look at this, is pin bar, you know, and we've actually done a previous breakout. Even false break means that the stops out have been taken, which is what which is what the bots usually hand. But either case, one would assume that this is done because of the pin bar, right? But I think because of the structure, yeah, that might not be done yet. I think we're gonna get a 4 over here, maybe consolidate for a bit, then have another leg down, perhaps closer to the 68, okay, rather than to the 69 where we are now, and then move all the way up, okay. Also, W, X, and Y, yeah, we'll look at the waves A and B here, get us to around 68,125. Maybe it would be correct to also look at the equality for waves W and X. So it is prone to measure that one as well. And as you can see, it comes around the 68 as well. Not obviously necessary that we're going to get there. It's just usually wave Y and C, contrary of a simple zigzag, they do the 100 Fibonacci extension of the wave, either W or A and X. So that's you know, equal waves, the first and the last, pretty much. Now I'm going to add the 78.6 here. You see, comes to 38.2 as well, 69, right? Now 69 is an important level because it's a psychological level first of all, but obviously the 70 is a much more important level. So we might move up to 70, consolidate a bit around the 69, 70 area, and then move lower down to 68. Okay, we need of course to pay attention to how that to the, I would say medium term, maybe short to medium term, okay, which means a few days here, maybe a few weeks. And the truth is that on the RSI and the MACD, we don't really see any signals, okay. I mean, we see this sort of, you know, signal to the downside, which was good because it's already, now it's priced in currently, but there is nothing else to give us some sort of guidance, which means we could remain here for a bit before we get another leg to the downside, in my opinion, of course. Now on gold, let me go back to the 1 hour. On gold, we said if we remain above the channel, we remain bullish, and this is what's actually been the case for now. 1, 2, that might be 1, 2, 3, 4, and 5 for 3, right? Or it might be a case that this is like 1 and 2, and then there's going to be 1, 2, 3, 4, 5 for 3, 4 and 5 for 3. Then we get the 4 and then the 5. We do not know which multi-structural, so we really need to look for 5 waves here. Okay, we've got 5 waves here. Clearly that's my 1 and my 2, right? And perhaps that might be also my 3 and my 4. And why? This is because, first of all, wave 3 broke the channel, and second, the correction is looking very similar. Okay, I know that it's not usually what we want to see, because wave 3 should be at least 100% of wave A of wave 1, and in this scenario, if we look at it, if we just compare, there we go. I mean, we barely just done that, we're not even there. I mean, barely just done that. So usually when this relationship is the same, this is an ABC. So, but you can see that it continues higher up. So it's not an ABC. If it would be an ABC, then down where you go, W, X, and Y just doesn't look like the structure right now. So with 100 being done here, one can assume that's my 3, but I believe that this is a multistructure in 3. Otherwise, it would be an ABC, I repeat. So I think this is 1, 2, 3, 4, and this is probably ABC. Yeah, we're going to get another ABC, and ABC might be an ending diagonal in wave 3. We're going to get closer to 1800s, then correct, and then continue higher up. Okay, that's what I think currently, that this sort of structure reminds me of the first few parts of an ending diagonal, because we've got an ABC here, okay? And here it can be considered ABC, or maybe, we're going to get ABC here. Or it might be a case that that's, the 3, which I don't think so. It's even shorter than what we thought before, an ABC, but this for wave B looks a bit extended. So not really something that I see high probabilities. So on this particular move though, the RSI and the MACD show us a bearish divergence signal, and I believe that we could get it. Okay, imagine price is getting down here on the channel and receiving a rejection. That would be a very good signal to the upside, and it's very possible that it happens. Now we remain to see what's going to happen around the previous high, 1800s or so, because it's a strong resistance as well. Yeah, and we want to see, of course, the low of 1780 intraday at least holding. Okay, I'm not saying we cannot go lower down. We can easily go lower down. Okay, and that would be like my 3, and that would be like my 4, and that would be like my 5 or something like that. But it's just I don't like that wave 3 only extends around 100% of wave A. And now on Lufthansa. Lufthansa, we haven't looked for a while. Back last time when we looked at it, I was expecting a correction, well, down here, if I'm not mistaken. We were looking for an ABC, and that was W, and that was like X, and or maybe X was here, and we're looking for Y, something like that. Obviously, with that now, structure's changed. That's a clear 5-wave move for A. This is a triangle in B, and then we've got 1, 2, 3, 4. And looks like we're going to get 1, 2, 3, 4, and 5 here, right? Because we've got a 5-wave move to the downside over here, yeah, and we've got some sort of correction over here, 1, 2, and 3 only. Most likely means we're going to get the 4th and the 5th one, and then because we are looking for a simple zigzag here, that's a 5-wave move to the downside, which means that most likely we're going to see prices getting lower to closer to the $8, which is a 78.6 Fibonacci retracement of this leg to the downside, which is a correction either in wave 2 or in wave B. Okay, so I will be looking for a potential move to the downside. That's going to be a continuation of the impulse, right? Or maybe I'm just saying, because we are in the last wave, it might even turn as some sort of ending diagonal over here. Okay, I wouldn't be surprised if we see prices moving up to ensure that wave 1 and 4 interact with one another before we see a move to the downside. Now to the upside, I will be really looking for a I would say the 9.17, because if we break above that, because that's supposed to be our wave 1 internally, then this is not going to be impulsive any longer. So I want to see that small correction now probably, and then a continuation to the downside. We're going to get wave 3 of this move, yeah, 1 and 2, and then the 4 and the 5th one, which, as I said before, likely to bring us closer to the 8 or so. Now, MACD and RSI for now nothing, and we are moving down, which is maintaining the bias to the downside. Okay, guys. So for today, this will be all. I hope you enjoyed the video. And if you have any comments, do not hesitate to leave them on our YouTube section. And I'll get back to you as soon as I can. Enjoy the rest of the trading session, and we will speak again tomorrow.